Hi guys, and welcome back to another video of me, Connor. This is another video in our series of the weekly watch list. Something I'm going to continue doing, or aiming to do every week, and I'm also going to start looking at doing other videos within this series, and within different series in my channel. So if you do have any video suggestions, please leave a comment down below, and I'll try and get around to doing them as well. So firstly, as always, I'm going to try and start by taking through a few of the trades I took this week, and then I'll move on to the trades I'm looking at for next week. So there's a number of trades that I'm already in, there's a number of trades that I took last week and closed for profit, and there's also a few that I want to go through. So I think there's around 12 pairs that I'm looking at, and then there's 5 that I'm going to take you through now. Let's start with CAD Swiss, or CAD CHF. So this is one that I covered last week with the head and shoulders. So here we have 1 touch, 2 touch, 3 touch, the 3rd touch. We see we broke through, and now we're retracing for our retest before coming lower. So firstly, what's a head and shoulders? Head and shoulders is a candlestick formation. So it could be on any time frame, but of course the higher the time frame, the more significant the pattern. So the head and shoulders, we can see it's not just sort of one candlestick or a couple candlesticks, it's a pattern that is created. So you can see we have the left shoulder here, the head, and the right shoulder, hence why it's called the head and shoulders formation. So this is a reversal formation. In an uptrend, we'll get the left shoulder, the head, the right shoulder, and then after the right shoulder and a break of neckline to confirm the head and shoulders, you'll see downwards movement. If it's an inverse head and shoulders, it'll be the other way. So it'll be left shoulder, head, right shoulder, and then push to the upside. So in this situation, the reason why we took this trade and the reason why I covered this last week was because this trend line here, we can see we have this head and shoulders, which sometimes be a very significant way of price trying to break through of the trend line. So with this, we see it's on the 4-hour time frame, so pretty strong, and we broke through, created this new low. So using our strategy, we've applied our Fibonacci on this counter trend line, and now we are looking for a scaling, which I did get scaling, and it's currently running a little bit of drawdown, but I'm expecting it to be fine, and then we'll be looking to take this lower. So next, I'm going to take you through CAD JPY. So CAD JPY is another one that I'm currently in. I closed the front for profit in my initial entry, which is up here, and then I've scaled in here, also 0.5 fib, the same as my other trade on CAD Swiss. So with this, I'm aiming for the lows of -0.27 and then potentially lower, as we do have sort of all this price to look at and look left at. So we have got a lot of movement to go. I expect sort of this one to come down to at least 80, as it sort of magnetizes towards 80 every couple of months. So that'll be something to look forward to. But like I said, so we have this sort of break trend line, which I covered last week. This sort of reversal, come down, impulsive move downside. Then we made a new low, so we added our Fibonacci, and then we got the entry, and now sort of scaling in. Next, Euro USD, trade that I'm currently in. So this one, if we go onto the daily, it'll be a bit clearer for you guys. Okay, so we have this channel, and then we sort of come down to this part. We have this trend line that we broke. We made this double top formation. I will cover the double top formation and why this was expected, and why we can sort of use the DXY to tell us why this trade is a very, very good higher potential trade and high probability trade. But basically this one, we have the trend line here, we have the break, we have the double top formation, come down into our golden pocket region, and then off of our golden pocket region we saw this bullish candle, bullish engulfing the spinning top before. So sort of, if this bullish engulfing was more sort of bullish than this one, we would have had a morning star, and then very nice candle to follow. And now we're looking to sort of take it from weekly support, golden pocket rejection, retest of this area, and now we can sort of look to take this long up to our -0.27 fib, and then potentially higher, probably long-term target 14144. So now at USD CAD. USD CAD, I am in sort of long view USD. It's only sort of quite an early one into it. So as you can see, we have this trend line here: 1 touch, 2 touch, and then 3rd touch. Break or bounce situation. We have the double top formation, and then we come through, broke, retest, come back down, made a new low, therefore we apply our Fibonacci 0 at the low and the 1 at the high, and then sort of looking for the ABCD movement. So to go through ABCD, what does this mean? So what it means is that we're looking for an extension, then a retracement, and then an extension, then a retracement. So this would be our A, at the top making a high, so the downtrend, this would be an A. Then we have our extension to B, so this would be our B, then a new lower, so in this case we have high, lower low, and then we have retracement into our golden pocket region, which would then form a lower high, and then we have an extension, which would be our minus 0.27 fib, which would be our D, and this would be our new lower low forms, with so A, B, C, D. And that is why we use retracements and extensions in terms of Fibonacci to try and predict where the next trade move is going to be, and that's why it's important that we're accurate to ensure precision within our trades. So with this one, we had this trend line, broke the trend line, come into our golden pocket, and then we got a nice entry with this double tweezer top rejection, big bearish engulfing candle, big candle, and now we're looking to take this long-term short. Obviously USD CAD I've been looking at for weeks, months, and if we look into the weekly, we can see why sort of there's so much potential here, and definitely some big reason why I'm going to look to take this long term. So obviously we've only got in here. Obviously we can see on the weekly how important this sort of candle was, because we can see all the pressure that moved to the upside, couldn't maintain it, and then the bears come into the market. So now what we're looking for is price to come down, break through this trend line. If this breaks through this trend line, then we have so much potential, and that's why I'm looking to hold it long term. So much potential downwards, and like we say, fall off a cliff. So definitely something to look for. And then finally, US Swiss, which I got stopped out of, unfortunately. Let's go back into the daily. We'll go into the 4 hour speak anyway. So starting daily, got this channel here, break, double bottom, up, and then we see this rejection off our golden pocket region, and then we come down. So if we go on to our 4 hour, let's get rid of this flag. So basically what we had here was, I've had my stop loss, I think it was set around 9.89, somewhere around this region here, and unfortunately just due to correction, price did break back up, took me out, and then continued to go down. So still 40 pips that I took in this trade, but annoyed it couldn't go longer, so I will look for a scaling if possible. However, I have got exposure to other USD pairs, so therefore I'm not too worried, and if I miss it, it's not too bad. So I still made 40 pips I didn't have before. And obviously capital management is the most important thing within trading. So let's move on to the trades I'm looking at this week. DXY to start off with. For those of you who don't know what a DXY is, DXY is the dollar index, and this is how we can monitor the price of the dollar against other major currency pairs. So if the dollar index is going up, Euro USD is going to go down due to the inverse correlation. So this means that as one goes up, the other one goes down. So in this case, DXY, we're looking for it to go down. I'll explain that why. And then Euro USD to go up, so it fits perfectly with our Euro USD long trade. So as we've had for the last couple of weeks, we've got this channel, one touch, two touch, third touch. Then we expected that bounce situations. There's the highest probability of the bounce situation on the third touch. So we saw that breakthrough. Then we sort of made this new high here, so we put a 1 here, 0 at the double bottom. So as we saw the Euro USD, we had the double top. No surprise, as the inverse correlates, therefore you got the opposite. So with that, we can see we had a double bottom, which actually led into our golden pocket region, or sort of just below that at 0.618, and then we had a really nice rejection with these 3 candlesticks, and then this massive move down. We can see we're actually touching our 98 level, as we know the whole numbers are important within the DXY because of they sort of hold a lot of importance. So as you can see here, we actually did break through successfully, retested, and we couldn't break above it. So if we maintain below our 98 and below the 50 EMA, which is proven to be quite important, we can sort of look to go downwards targets like 97 at least, so equal to this low here at around 97.14. So around there. So moving on, we're going to go to Australian dollar CAD next. If we go back onto the daily. Okay, so on the daily, we can see we've got this trend line here. We've had this break, new high formed, and then we apply our 0 fib at the top on the high, and the one at the bottom of the last low, and then we look for our golden pocket or one of our fib projections with some different confluences to go along. So with this one, we had our 0.618, as I called last week, and you can see we're sort of still in this 50 EMA now, but I expect this to sort of go up to targets at least minus 0.27 for that extension. So we see an uptrend, we've got A, B, C, D. This one sort of the move I think is already gone. If we break for the 50 EMA and break through this structure here, you might be able to sort of get along for around 130 pips. But for me, I think this one's already gone. But it's just something to look at compared to my analysis last week, and just sort of how sort of watching these watch lists will help you find these different moves, help you understand market structure, help you understand Fibonacci, just sort of how I look at the markets personally and how I found success in the markets. So with this one, just sort of looking for that long, and if you're not already in it, you could potentially get it after a break of market structure and a break above. Australian dollar, US dollar. So as we saw, with the dollar, we expect the dollar to weaken, and therefore you'd expect this pair with the dollar being weaker. We'd expect the Australian dollar to see some bullish potential. Obviously last week I did cover, so we thought we was going to break through and go higher or potentially bounce. We did bounce and we broke below 50 EMA. So this one, with the Australian dollar so weak last week, I think across the board, and as we'll see, the Australian dollar was so weak, so it didn't really help this pair. So we can see lots of wicks down here, so I don't really expect it to come any lower than 0.67. Hopefully we can break above this 50 EMA, and if we do see that break, we can see something like this. So a break above, create a new high, then of course we're going to get our retracement, and then we're going to get that next move to the upside. So something like that potentially, I think would be our ideal entry. I don't think we're looking for shorts. I don't think there's any reason to take shorts. There's not enough in it for me to get any shorts, but definitely something to look out for. Okay, Euro Australian dollar. So let's just sort of clean up this mess a little bit. So what was it we've got here? We've got this trend line. I think we covered this last week. We've got this trend line here. We've got sort of this longer term picture fib, but we can get rid of this. And then if we look at the lower time frames on the 4 hour, excuse me. So on the 4 hour, we can see trend line, counter trend line. We break through that with the head and shoulders, come down, and then we made this inverted head and shoulders. So you can see left shoulder, head, and then my ideal entry was on the 0.5 fib or the 50% fib. If you do prefer fibs in percentages, let me know and I will change that, as I'm probably going to look to change that anyway. But as you can see, when we was looking, it was around here, so I covered the left shoulder, head, and then looked for the right shoulder, and I had alert set at 1.60500. The app I use for alerts is called Call Levels. It's absolutely free, or you can get TradingView Premium, which allows you to get some alerts, more than one alert on there. I use Call Alerts, it gives you push notifications on your phone, and it's free to use. So I had an alert set, and it sort of didn't quite touch the 500, and therefore I missed the right shoulder in the uni. But my analysis is still correct, and we could potentially look to take this higher. So if we go into the 4 hour, we can see I've added this fib here, so 0 the new high that was created, 1 at the low, and then we can look for sort of a 0.5 maybe retest trend line and retest of the 0.5 Fibonacci, or there's also the 0.618 fib, which is just by the 50 EMA to look to go long. And if we can go long, we have sort of the minus 0.7 at 1.63116, or we could potentially go a lot higher. If we go back on daily, we can see there's a lot of potential to go a lot higher up here, but something to look at. Possibly could break back into it. The euro is looking pretty strong, and the Australian dollar has been quite weak, so definitely something to look at. So euro CAD correlated quite well. No surprise, we see a break of the trend line and a retest. So now we're looking for either to come in back into one of our golden pockets, sorry, one of our Fibonacci, so 0.618 level. But if we go into the 4 hour, we can see we have this sort of much cleaner and sort of shorter term fib. I think that will be much more helpful at this point. So that's why it's important. Different time frames can have different Fibonacci's for different price action. So here we're looking at the 4 hour because we made this new high. We had a big shooting star candle, so potentially could see some more some future downwards potential, possibly to go into one of our other fib levels, or we could reject from 0.5. We do have some market structure here, as you can see here, some market structure just being where we see a lot of price action. We have some market structure here. We could potentially come a little bit lower, 0.618 or 0.786, where the 50 EMA is just in between them in our golden pocket, and then we can look to push higher, and then possibly up to the high of 1.47150 from this region here. So something to look at, and I'm looking to go long on Euro CAD this week if we get the entry. Pound Aussie. So this one I actually covered last week, and it didn't go the way I expected it to. So therefore, we're going to look at both possibilities still. So on the daily, we have this trend line. So this is a counter trend line. We have this long-term trend line that's started here, and then what we were looking for is price to come down to 0.618, our 50 EMA, and then push off higher, which I think the same was with Euro JPY, and then also GBP JPY, which I'll also be covering after. So with this one, we actually saw a break of this correction, and we actually broke above the 1.88831 resistance that I have outlined here. So with this, if we go onto the 4 hour, we can look at how I'm expecting price to react now that we broke that level. So now with this shorter term fib, 1 at the high, 0 at the top, 0 at the high, 1 at the low, I'm expecting a retracement at either the 0.382 with 50 EMA, 0.618 with market structure, or the deeper 0.786 to look to go long. So as you can see here, with Euro Australian dollar, we had that head and shoulders pattern. We do sort of have a left shoulder, head, right shoulder here potentially, so maybe that's why we saw that. Definitely something that we can look at as to why it sort of didn't go the way we expected it to. But now we sort of look to get into one of these levels and potentially go long for a couple hundred pips. So it's something to look at there. GBP, New Zealand dollar, a pair I don't normally trade. However, something we can look at if we go back onto the daily. So on the daily, we can see pretty easy and simple setup for you guys to understand. Trend line, 1 touch, 2 touch. So we're looking for a third touch. So on this occasion, we can use our different Fibonacci levels. So we can use 0.5 and 0.32, or the 38.2% and the 50%. So you see 50 EMAs here. So 0.5, 50 EMA is quite nice. Or we have 0.32 with market structure, and we see how this price is reacting to 0.32. It's not breaking through, faked out here, but didn't successfully break. So we potentially see sort of consolidation here and then break from here. And then we'd be looking to target sort of minus 0.27 or minus 27% at 2.08900 for a couple hundred pips. For I think it's 110. But another one to look out, and this just shows you that simple sort of analysis. Trend line, 50 EMA, Fibonacci, and sometimes that's why you don't need to overcomplicate it. So next we're going to GBP JPY. So this one's, like I said, we was expecting price to come down to one of our levels. However, price sort of consolidated for the last sort of week or two. So what we expect here is price to sort of break through this consolidation. I'm expecting it to come down lower, either to our 50 EMA of 0.382 and market structure, to then push higher. We could also see price come down to 0.5 for a little bit of a deeper retracement, or potentially we could break higher. I would be very surprised if we did break higher before coming down to our trend line. And then if we do break below, we need a retest consolidation, come down. I wouldn't be looking for the short, as I'm looking for the long-term long. There's not nothing for me to support the short, and obviously the 50 EMA is something to be aware of. And then if we do get into one of these levels, I'll be looking to take it long up to minus 0.27 extension. That's GBP JPY. Now entered the JPY, which is New Zealand dollar, Japanese yen. So we see 1 touch, 2 touch, and now we're sort of consolidating around this third touch. So as you can see here, we have our 1 at the high, 0 at the low, and now we're just sort of sitting on that 0.5 fib. The importance of the fib here: 1 touch, 2 touch, 3 touch, 4 touch, 5 touch, 6 touch, 7 touch, 8 touch, 9 touch, 10 touches, 11 touches. Just literally on that level. The price doesn't want to go any higher. So what we can look here is we can look for a short down, sort of lower into sort of the minus 0.27 fib, which is at 64, so around sort of 400 or 500 pips long term. So something to look at there. Once again, very clean, simple setup. Don't always need to overcomplicate it. Just trying to build them confluences. Obviously, we do have the 50 EMA below, so it's squashed Price is squashing between the 50 MA and the zero point 0.5 fib. So it'll be important to see how we react in between those levels. Potentially a short on the cards there. New Zealand dollar, US dollar, another one of my favourite pairs, along with CAD JPY. So this one, we was talking about how the DXY dollar index is looking to go short, with the dollar becoming very weak. However, the New Zealand dollar US dollar pairing, we actually have had a head and shoulders formation formed, which goes against this idea, because we're looking here, we are seeing New Zealand dollar US dollar with head and shoulders suggesting to go lower, so right shoulder, and then we look to go lower. Whereas with DXY, we're expecting New Zealand dollar to actually gain momentum here and rise. So what we say here is we could just see price come down to our 0.618, where our neckline is, and just reject the neckline, which means there was no confirmation of the head and shoulders, and therefore we can ignore it. And then we could see a push higher, like we sort of done off this level, just sort of come back down, push off, and then go higher. Or we could potentially see a break of the, we could see the right shoulder, break a neckline, and then push below, and then down towards our monthly trend line. Personally for me, I wouldn't look to take the short. I'd only be looking for longs here. If we can get the rejection off one of these levels with, say, a morning star formation, which is a reversal pattern, or something else to give us long, I definitely think the US dollar is going to weaken, and a pair like this should be able to take advantage of that, especially the 50 MA sitting just below. So that's another one to look at. And then finally, we're going to go through USD JPY, which I was in the trade, and I think I profited. I can't quite remember what the profit was exactly. If I look on MT4, USD JPY, I got around, I think it was about 40 pips before getting stopped out. So price come up a little bit higher than I thought, and it stopped me out. Still another 40 pips, the same as USD Swiss. And then I'm looking for a scaling if possible. So off of this rejection of this counter trend line, if we go onto the 4 hour, let's hide this 4 hour, we can see the price made this counter trend line and it keeps rejecting. And then what we're looking for is a break of this trend line back on and then go down. However, if we look at this in a different way, we can actually see the Fibonacci, but there's something that we need to be quite aware of here. So to support the long, we could say that, let me go back onto 4 hour. So because we have this initial trend line here, we can look at the long. So what we do is we place our Fibonacci at this low here, and then at the high there. So you can see we've had a golden pocket rejection, and then therefore we'd expect this to break up, go higher with this tweezer top rejection, tweezer bottom rejection, and then potentially break through this counter trend line and go higher up to a minus 0.27 extension. However, the other way we can look at it is this counter trend line is we can place our fib here, put the other fib here, and then we can look for this 0.618 or 61.8 Fibonacci rejection, so we could then support the short. Personally for me, I'd probably say the short has more potential in it. However, I think it's quite hard to be sure. Obviously, the long has the longer term trend line, therefore it's the stronger trend, and therefore don't really want to trade against the trend. So either way, we can look at this one, sort of look for that break higher, and then possibly we can break above up to the top of the channel for around 100 pips. If we do get the short, then naturally there is a lot more potential with it. If I change this back into 4 hour. Yeah, so as you can see, if we do get the short, there's a lot more potential there, and then we potentially look to take this a lot shorter, and then obviously a lot lower. So then that's sort of all the pairs I'm looking at for the week. Something that I definitely want to start doing is some new videos, so maybe about my trading journey, whatever you guys like to see. If you comment down below, and I'll make sure to comment, obviously reply to your comments, make sure to like the video, and make sure to subscribe for new content. And if you don't already follow me on Instagram, follow me on Instagram at Connor_RF Trading. Check out my link tree where there's obviously my YouTube. There's also my the RYF page and what we do at RYF and what sort of my role is at RYF. You can message me more about that on my WhatsApp. And of course, if you do want to message me at all, message me, comment down below. You can message me on WhatsApp or send me a message on Instagram. I'm normally quite active throughout the day on Instagram, and also I do send updates and analysis on my Instagram as well, so it's definitely important to keep up on there. And then make sure to ask any questions if you do have any, guys. And by all means, if you do sort of have any analysis you want to send me, any questions, then always do that as well. So I'll see you guys next week. Have a great trading week. Send me your trades and analysis, and I'll see you guys soon.